Commonbond is shutting down. Why? I know the answer. The answer is that they did not go the direction that SoFi did. Hey there, Lincoln here from bowlacademy.org. Today I want to discuss with you staying power. It's very important for great businesses and for great investors, those who know how to stay in the game. I've discussed this in many videos before, one of them being buy the dip, sell the cul-de-sacs. I've gone over this a lot, that you have to be able to identify great opportunities when no one else similarly can, buy into it because you've done your research, and you hold on for the long term, and you find ways to continue that conviction that you had from the start, so that as the market goes up and down, you can weather the storms and take advantage of those downturns and then come out on top. And if you do that well, history has shown over and over that you will end up much better than those who stay out of the game or didn't find a way to stay in the game. Were too afraid to stay in the game. Didn't plan for the down days. Didn't take advantage of the down days. And so we're here with one of SoFi's earliest competitors, earliest peers in the game, disrupting the student loan business, because it is a business, disrupting the student loan refinancing game. SoFi was founded in 2011 as a peer-to-peer student loan company. They would find alumni who went to your school and are now making lots of money and gave them a great deal to fund your student loans, to fund your education. And in return, the investors would get 4%. SoFi will keep 1%, and you will get an education at a post-secondary school of your choosing. Of course, they started at Stanford. That's where the founders are from. And there was another company. In fact, there were many. There was Earnest, Prodigy, and then there was Commonbond. All of these businesses started by alumni of their schools. And they all did it similarly. They all found a way to get a better deal for students than the government was offering them. And because student loans cannot be defaulted on or wiped out in bankruptcy, it's a great business because there's a very, very low chance of default, incredibly low, near zero. However, as well as it was going for everyone over the years, SoFi included, Commonbond, Earnest, everyone making lots of money in this business, eventually we got to 2020, where the whole world saw a pandemic that killed millions and millions of people. But it also took a big toll on businesses, especially those who were in the student loan refinancing business, because the government of the United States said, we're putting a pause on that. You do not have to pay your student loans for the next year. And then they said for the next quarter, and then the next quarter, and then the next quarter, and it has continued through this year, and now will hopefully end at the end of this year. And that was not good for companies like SoFi and Commonbond, and we know that for sure now because Commonbond has decided to close their doors. Commonbond is shutting down. After 10 years, they're shutting down. They couldn't survive COVID. They could not find a way to get through COVID. Why? I know the answer. The answer is that they were not diversified. They were not a one-stop shop. They were not built to last. They were not built with the future in mind. They were not built with a grand vision of solving all of the problems of people who needed a way to manage all of their finance needs in one place. They did not go the direction that SoFi did after getting a great mind like Anthony Noto on their team, who has led this company in its one-stop shop online bank to becoming an actual one-stop shop online bank with a bank charter, national bank charter. And so over the years, SoFi has built many, many businesses. They have student loans, but they also have personal loans, home loans, car loans through a partner, and so many other products, credit cards, savings accounts, checking accounts, name it, they have it, investing, cryptos, all of it. And what does that do for a company and its investors? Well, as an investor, I love, let me say first, I hate diversification. For me, personally, I love to be concentrated as an investor. I love to find a few companies, do my deep research on them, understand their mission, their why, what they're out to do, and then go heavy in them. Invest with conviction, not spray and pray. I'm not much for praying. I don't need your thoughts and your prayers. All I need is the information. And given my track record throughout my life that's gotten me here at this point as a highly paid software engineer and someone who owns a house and is number one on Google in many keywords, I trust my own judgment. It's gotten me this far. And so I find those great companies and I invest heavily in them. But then I expect them to diversify for me. I want my businesses to be diversified so that I don't have to. Because if they're diversified, that makes my risk go down. That means that they have de-risked the investment for me. Because now, if for some reason some pandemic comes in 2024, they'll be ready. They'll be ready to let go of whatever business gets hit hard and just maintain that, and then have the rest of their businesses continue to grow as SoFi has done. Because while Commonbond and other lenders were struggling throughout this pandemic, SoFi has doubled their net adjusted revenues since 2020. 2020, they've doubled it. Let me just get that right. Yes, $621 million they made in adjusted net revenues in 2020. In this year so far, they're expecting to make 1.2 billion in adjusted net revenues. And if you go back to 2019, because that's actually what matters before the pandemic, before a whole year of the pandemic, because 2020 was mostly pandemic, so they had their revenues cut, their guidance. Actually, I shouldn't say that. They actually beat their guidance, but they could have done even better if had the student loans not been paused. But 2019, they were at $451 million in adjusted net revenues for that year. They've 3x'd since the end of 2019. While their competitors like Commonbond are shutting their doors, unfortunately, after attempting a pivot to solar lending for solar companies. And that company was from Wharton MBAs. So looking at SoFi's performance, growing revenues, growing products, they're just killing it. They're growing their lending products by 22% year over year. Looks like an average of about 15, 18%, something around there on lending, while their competitors are shutting their door. They're growing their financial products by 100% year over year. More than that over the last few years. This year has been 100% in the last quarter, Q2 reporting, while their competitors are shutting their doors. Why? Because they're diversified. They're a one-stop shop. And so if one business is suffering, where student loans has just been stagnant, just been maintained from what they were in 2019, SoFi has picked up their other businesses, such as personal loans, and that has become their biggest moneymaker. And then there will be home loans if something happens to personal loans. And then there will be credit cards, and there will be their interest from other avenues out there that also are benefited by their financial services productivity loop, where they get customers in the door from services like SoFi Money with their top of the line interest rates at 2%. That's 200 times what traditional banks offer. 200 times. That's not a mistake. I meant to say that. If you're confused, that's 200 times. Do the math. 200 times what the other banks give you on your interest, on your savings. SoFi gives it to you on savings and checking. And so SoFi, while everyone else struggles to get over the student loan moratorium that continues to be extended and hopefully will be ended by the end of 2022, now that Biden has given a forgiveness to student loan borrowers who make under $125,000. I don't qualify, but I'm very happy for those who do qualify. I have lots of student loans. I'll pay them off eventually. I'm not in a rush for that, but I don't mind that I didn't get it. It makes sense that those who need it the most get it, so that they can continue, so that they can now participate in our economy more. But that hurt those who are dependent on student loans as their entire business. And that's why I'm so convicted when investing in SoFi. And as the stock market does its thing, it's been much different than what I expected this year. I thought it was going to be a great year when it comes to returning and recovering from the start of the year. It has not done that. And SoFi is still here. SoFi has increased their guidance. SoFi is still the owner of Galileo, the AWS of fintech, which I've covered in many videos before. You should go watch them. SoFi will be everywhere. That's one of them. Go watch it. Very important that you understand the entire business of SoFi. They provide the infrastructure that powers all of these neobanks that you might have heard of. And in the future, they will power the legacy banks who want to become online banks through the acquisition of Technisys. And they will eventually become the sponsor bank of other neobanks and institutions that want to offer financial services to their customers through their national bank charter and through Galileo and through Technisys. That's what you look for in great businesses, in great investments, so that you can focus on a few, do your deep research, understand them, and then stay convicted. Keep doing your research and stay in the game. Continue to hold through the ups and the downs. When the stock market goes crazy and gets all finicky, you say, okay, I'll keep buying. I appreciate these discounts. Thank you very much, sir. Yes, I will take more, sir. Thank you. I appreciate your lack of any conviction in anything that you do. Your lack of good judgment. I appreciate that. Thank you very much. I will take this and I will hold it. And as it recovers, I'll continue to hold it. Because wealth isn't about how much money you have in the bank. That's for the poor. The poor have cash in the bank. Wealth is about how much equity you have. And the cheaper you can get that equity, the better. And so if I can get SoFi at $4 instead of $25, I'm very happy, because eventually it will rise and maybe get to 10 and then 20. And then maybe it stays there for a while and I keep buying, but I continue to acquire more equity and my wealth continues to grow. I don't need all that cash in the bank, because that cash is depreciating due to inflation. But these assets, company like SoFi, doubled, tripled their adjusted net revenues throughout our pandemic between 2019 and 2022. They have staying power. They know how to stay in the game. And so as an investor who is concentrated, I get the benefits of being concentrated, but then also having a company that continues to grow while everyone else shuts their doors. I hope if you're an investor out there in SoFi, that you find some solace in this message that yes, the market is down, everyone's struggling, especially SoFi getting hit hard, but that means that you get to acquire equity at a cheaper rate because some fools saw sale, and they ran away. They said, nope, I don't want that. Thank you very much. Discounts on what I bought yesterday for 3 times more. Nope. Thank you, sir. I'll pass. I'm going this way. I don't need that. And so you walk in and you say, thank you. I'll take that. Do you have any more? Can you go scare some more of the fools? I'll be right here to buy from you. And you get the shares for cheaper. You hold on. Continue to invest. Continue to do your research. So long as nothing has changed on you, your conviction has changed, continue to buy. It's really that simple. You don't need the quants. You don't need the Gem Kramers. Just do your own research. Read some SEC reports that the companies file. Listen to the earnings calls. It'll all be all right. Thank you, and I'll see you next time. Come stop your crying, it will be all right. Just take my hand, hold it tight. I will protect you from all around you. I will be here, don't you cry. For one so small, you seem so strong. My arms will hold you, keep you safe and warm. This bond between us can't be broken. I will be here, don't you cry. 'Cause you'll be in my heart. Yes, you'll be in my heart. From this day on.